pricing is absolutely key. It's a major driver. At the end of the day, it comes down to that more than anything else, truly, is what the price is, right? It has a major, major impact. And that has changed a lot, especially over the past 5 years, have been, somewhat of a roller coaster. We saw a lot of pent-up demand post-COVID, and we also saw a lack of units, a massive amount of building that happened, and all those units sort of landed at the same time. And so what we've seen for the past few quarters, this massive number of new units that have been delivered, and it's both apartments, single family homes, townhouses, all segments have seen a lot of this growth, right? And then we've also had some slower demand, right? A lot of people are staying in their current rental. They're staying in their current home also and not selling, right? For all kinds of different reasons. So you have this hesitation on the consumer side and then absorbing all these units that have been built. And so what we've seen is some softening in rent growth. And we're starting to see, especially on the single family side, everything go back to sort of pre-COVID levels, sort of what all the experts in the market are calling normalization, right? So we're getting back to what is normal. But we have seen some markets, take some big hits. A good example of that is, Florida. We've seen some submarkets in Florida where rents have been very soft, right? Where Chris, you know from direct experience, where we've had to get very creative and make some adjustments, as that market is constantly changing. You've seen even some in Texas, right? And Austin, Texas is a good example. Chris, I think you just completed a lease up, not too far outside of that market, and we had to do some aggressive, pricing to get it in line. I think when we underwrote it, it was high 2000s in the rent, like maybe 2800, and then you had to start making some cuts, right?
Yeah, absolutely. I think, and that's a big piece right now in today's market is you have to be very responsive with your pricing. I think that deal was somewhere around 2,800 when we underwrote it. Once it was finally built, I want to say we were already down in the 2,200. For the first release. Obviously, always get some early adopters, so we closed a few leases there, but really. That was probably about 9 months ago. We've even seen some deterioration in pricing in that market because it is one of the probably the most overbuilt where we had to go, we had to monitor throughout the first 3 to 6 months of the lease up as well to really lock in that pricing and make sure, you know, we were fighting for occupancy when we needed to. And now if things pick up as they're anticipated to next year, we have that base. And we can start talking about rent growth and getting back to it, but riding 25% vacancy through the end of this Q3 Q4 this year really would have put the property behind.
Yeah, and now that you're stable, you're starting to shift rent the other way, right? I know you had positive rent growth on your first batch of renewals, and you and I looked at a schedule based off some of the forecasts, right? That got us to get leased up. You've seen some of that, projecting that we're gonna, really raise rents there, right? And I think that's the right way to handle it. The good news is what everyone is predicting is going to happen in the market because there's not a lot of new deliveries coming up, not a lot of new construction starts, which, if you're sitting on the sidelines, when do I start building? That quite potentially could be a good time to do that because there's not a lot of other folks, getting their homes out there. We're expecting, Q3 and Q4 to look a little better. We're also expecting Q1 and Q2 next year, especially on the multifamily side, to look better as those deliveries have slowed down. And we're seeing some of that in real time, right? In this one particular asset, we went down. Now we're starting to come back up. We're seeing that in some other markets, and some other stabilized lease ups and ones in lease up as well. So, that's the good news. That's where we're heading. That's where we're going. So.